Infinite banking in Canada. Is it right for you? Who should do this and who should not? Hi, I'm Laurent Meunier with Safe Pacific Financial, and welcome if you're here new, and welcome back if you've been here before. Today, we're going to talk about the infinite banking concept, or it's also called family banking, private family banking, bank on yourself, whatever you want to call it, and whatever all those other people selling videos and books want to call it. Really though, who is this good for and who's it not good for? There's kind of two big categories of people that should do this. One is if you're doing this personally, usually it's for you and your family. The other is if you're doing this corporately. So you've got an incorporated business and you're doing it inside that corporation. So who should do this? This is a great strategy for people who have financial stability in their lives and can commit to a long-term savings plan. And I mean long-term savings plan, like a minimum of about $1,000 a month for at least the next 10 years, where that's not going to be a problem for you. Who should not do this? If what I just said sounds scary to you and it sounds like something that you're not able to commit to, then you shouldn't sign up for it, right? For business owners, this is a great strategy if you're keeping retained earnings in your company every year. And even more ideally, if you keep the retained earnings and then you push them up to a holding company. So you want to have a holding company, and then what that does is it allows you to keep the cash inside the company. It allows you to earn a return on these funds while not being subjected to the high taxes. And especially here in Canada now, we've got these new passive income rules, right? Life insurance doesn't get affected by those passive income rules. And it allows you to keep high liquidity for your business. So as a business, generally you don't want to tie up your cash. You need cash for, whatever. We just had a pandemic, maybe some sales didn't come through that you wanted to, and you need to have access to the cash, but you also want to have it invested. Having this strategy also allows you to build up a retirement plan inside your company. And eventually, if you want to pass this down to your kids or to a charity of your choice, this is one of the most tax efficient and fastest ways to do it. So the business owner really should have consistency of revenues, consistency of profit, and a reasonable expectation that you're going to be saving high retained earnings into your company every year. And especially, this works really well for people who have a high margin business and not a huge ability to go out and get more expensive, right? That's really like an ideal client for this. Whether you're doing it personally or in your company, that's kind of the basic wants, like what you want to be as a person. Who should absolutely stay away from this strategy, right? And just because you're staying away from it now doesn't mean that this might not work for you in the future, but this is absolutely not a good strategy for someone who's not in a good financial situation, or someone who's got lots of debt, or someone who doesn't have good savings habits already. Now, I know on YouTube and TikTok and on the internet, everybody's always telling you that this is the greatest thing ever. Everybody should do it, but really you should not do this if you're not in a good financial situation. I'm not going to gas you up and tell you that this is going to bring you unicorns to your house tomorrow. Some people really should not do this strategy until they sort out a lot of the other negative financial factors in their lives. For just a basic, easy number to go with, if you're an adult and you can't commit to saving at least $1,000 a month every single month for the next 10 years, this is probably not a strategy you should do. Most of our clients are actually saving way more than that. We have clients putting in $50,000 a year, $100,000 a year, $500,000 a year, and we've got clients putting millions of dollars a year into these types of policies. Those are the kind of numbers that you really want to make this work for you. If you're doing this for a child, you can work with much lower numbers, like a few $100s a month or $500 a month. And then there's usually what we're doing is we're setting them up for 20 years because, when the kids are born, we're setting it up, and then the parents will pay for this, or maybe grandparents are paying for this for 20 years, and then they give it to the kids. There's a ton of flexibility. But basically, a recap of today's video, who is it good for? It's good for people with a family who can commit to saving at least $1,000 a month for the next 10 years. It's good for business owners who have a holding company who are consistently saving retained earnings inside the company. Who is it not good for? It's not a good idea if you are in a bad financial situation. Now, we've got tons of videos on this strategy, so please watch the other ones. And then if you think that this is something that could work for you, reach out We're very happy to chat. You can go on our website, safepacific.com. There'll be a link below. You could also message us through any of the social websites. But, when you message us through the website, that's the best. Somebody's going to get that message and reply to you within 24 hours, and we'll set up a meeting 24 hours on business days. That's it for me today, and I will see you next time.